What is up, guys? I hope you're doing well today, and as you guessed by the title of this video, today I'm going to show you volume profile, the basics of volume profile and how you can use it. I think you have already seen charts like this before. And this is the distribution of male height reported by the US government. And it shows you which height of male is most common. And those are sitting on these peaks right there. And you can see in this lower area we have 5.2, 5.3, and as we go up and up and up and up, the height starts ascending and we reach the peak where it's like 5.10, 5.11, 6 foot. And then as heights incline even more, you can see that there are fewer males in US having this height. So it is telling you something what is most common. And this is the volume profile or the distribution of volume traded during some specific time or session in trading. And instead of being horizontally, it's placed actually vertically. So it's showing columns like to the sideways. And so what this tells you is on which price level have most trades been executed or exchanges that happened. So if I just increase in a size of numbers so you can see this better, you can see that in this case Bitcoin was traded from 95,000 to $86,000 per Bitcoin, right? But where Bitcoin was least time traded or exchanged was in these areas where you cannot see columns or you can barely see the columns. So for example, from 95 to 93,000, there are low columns right here. That means that there hasn't been a lot of volume in the market. And as we slowly approach this area of 93 and 200, you can see some spike. Okay, so you can see this peak in volume, and this shows you that price has been or Bitcoin has been exchanged here more times than here, which you can take into consideration as the price has spent a bit more time here in this area at 92,000 than in this area, for example, at 94 or 95,000. And then as price slowly declines, again volume starts fading away. As you can see, there hasn't been enough or much volume right here. You can see low columns. And again, as price declined even more, then you could see a bigger and bigger spikes in volume. And what this actually means is that, for example, for some buyers at this level, it was very easy to find a counterparty for their positions. And this probably happened a lot of time because, as you can see by this column right here, you could tell that the times Bitcoin was exchanged was very big, than a lot bigger than, for example, here, right? And this in short tells you that this was price acceptance, okay? This was the price people mostly accepted during this time. Now, let's look into the anatomy of volume profile. So, if you open the settings of volume profile, here you can see number of rows and ticks per row, okay? So, for right now, we don't need this really because we trade Bitcoin, we don't trade futures. Then we would need ticks per row. The row size basically sets the size or the width of each of the row. Here we have volume. This is actually the interesting part, okay? So this is the total volume, which tells you, okay, how many trades were executed during this time at this price level, okay? This is the total. Then you have the delta one, which, as you can see, also tells you how many trades were executed at each price level. But besides that, it also adjusts the color based on which side of the volume was traded mostly at this price. So in this case, you can see that right here in my example, orange color means that there were more buyers or more buying volume was participated at this price. And as we started to go down a bit, you could see some selling volume right here. And this means that when volume was higher, there was actually more of selling volume than buying volume. But one thing you cannot forget is that there could never be such a thing as more buyers than sellers or more sellers than buyers, okay? Because every exchange needs equal amount of contracts for a counterparty. Okay, so like if you have 100 contract order, you need other 100 contracts. Like if you're selling or if you're buying 100 contracts, okay, of Bitcoin, let's say, you need someone to sell you 100 contracts. So there can't really be like more buyers than sellers. Okay, I hope this makes sense. And after that we have up and down, which is kind of same as delta, but it tells you, it basically puts sellers and buyers on each side. So by now you could have already seen these three lines I have on this volume profile. And this is the 68% level, which by the Gaussian law is referred to as a majority, okay? And everything beyond that is considered not so important, but still important. So if we take the same example on the volume profile, you can see that in this area, this is where majority of volume was traded, okay? So this is 68%, or in trading people round that up to 70% because it's easier. This is 68% of all volume traded in this time period that I have selected. And these two lines are value area high and value area low, and they represent kind of a border between a majority, so 68% distribution, and the other, what is it, 32, I think. And then you have this middle line, which you can kind of guess what this is. This is actually the point of control, or the point of the peak, or it shows you the point of price where most volume was traded, actually, the peak of all volume. And now, why is this so important? Let's turn on the charts that I have set for this one. Okay, so now you can see here that this volume profile is plotted like the weekly frame, and here you can kind of start putting this into image. You can kind of start putting this into perspective of how this works. Okay, so you have this low volume here. Okay, this was a bit higher volume node, and this is also something I want to tell you. The nodes. You have something called low volume node and a high volume node. So low volume nodes are basically those areas in the volume profile distribution where there is little volume traded, okay? So they are like these valleys, these lows of volumes. And then you have the peaks or high volume nodes, which are basically areas of volume profile where there is clearly a bigger peak in volume traded, okay? So for example, here, then you go down a bit, and then here, of course, and then we also start fading away, and this is also the low volume node, and then you have a little peak right here. And when I said that this area is where the most volume was traded, now you can kind of see why, okay? So you can see the price going here and then fails breaking below this area and just kind of like consolidating, ranging inside of this. This is also referred to as a value area or a fair value, which basically means that if something is fair value, it's fair for everyone. So this means that most of people were accepting the price in this range, and mostly on this price level where point of control sits. In the areas where there is little to no volume, you will always see some sort of a swing. So for example, this one, I don't know if you can see this candlestick, but this is like a big candle to the downside, and then right here, note this price level. Here is this little peak, and you can see this ranging right here. And this is also a bit like, this is also an area where price spent a little more time here, which potentially means that there were more trades executed, which resulted a little bit of a peak in volume. And right after that, we start swinging down, and you can see when there are swings to the downside, again, there is little to no volume right here. But as we start approaching this area, this is where people started accepting price, both buyers and sellers. And if you take a closer look right here, is where you have those borders or value area low or value area high are a lot of times the points where price tries to break below or above but fails. And this is something also known as a failed auction. And what auction basically means is like accepting a worse and worse price for the sake of still getting filled. So for example here, people were accepting, so sellers, right? Sellers were accepting worse and worse prices, but as long as they could get into the market, it was fine with them. But right after that, you can see that buyers started stepping into the market and potentially overtaking the sellers. And this is where price kind of rejected here, which kind of tells you there was like no selling pressure or enough of the selling pressure. And again, here, price dipped below this low, but again, there were enough buyers to push the price back up. And also for this high right here. And this is something that you could already use in your trading. So basically, failed auction, right? Or just breaking below and then going up again. But you still need some more concrete confirmations on that. And this one is also a good example. So you can see that after sellers started stepping into the market, again, price reached this value area low, which is the end of the fair value right here. And then buyers tried taking over the sellers, but they failed as sellers had more pressure and they started pushing the price below. So price has broken out into the area of imbalance. And so area of imbalance, or also referred to as an unfair value or unfair value area, yeah? Also some people call it a fair value gap, but we're not ICT. And then after price slips below, again buyers start taking control of the market and they start pushing price back up again into this value area where people started accepting prices at this area again. And this comes from the auction market theory, where it's basically people accepting worse and worse prices. Doesn't matter if it's sellers or buyers. They are accepting worse and worse prices as long as they could get their hands onto the market. And this is also called an imbalance, or the lack of other side of market pressure. So for example, if there is a lot of buying pressure, there won't be enough selling pressure in order to like stop this process. And those are stuff that we want to ride in the market, right? We want to ride those swings of imbalance because that's obviously where price moves the most, right? And now I'm going to try and show you some examples of how you could use this and maybe even potentially show you where I've caught some trades using this tool. So for example, okay, let's grab, oh, my microphone, sorry. Let's grab volume profile and okay, we're on the 1 hour chart. Let's select Monday. So starting the Monday and let's drag it to the Sunday. And this is the volume profile that I like to use the most. So basically distributed through the whole week, the past week, of course. And then in the current week, we're just looking where price is moving and then use the previous week's profile value areas or nodes for potential trade setups. Okay, so let's take this for example. We could see like price going down here, and here we stopped a little bit, accumulated some volume, then we swing down and started kind of accepting this price right here and created this fair price, fair value area. And maybe the default volume profile comes with this area of like imbalance a bit faded out, but I like to put this just the same color as this, so 100 opacity, because this area still matters, okay? And what I like to do is mark out the obvious areas. So basically low volume nodes, high volume nodes, doesn't matter. But what we're looking at here is this high volume node, okay? So this, for example, and you can see price broke out of this fair value area and came right here where there was also some sort of price acceptance. So this was also some sort of value area, okay? And so price came here and orders or trades started accumulating. And after some time, sellers again stepped into the market and pushed the price back into this fair value range. And this is something I would like to do. So basically, if price breaks out of this fair value area, you could either look for a breakout, so basically continuation, or a reversal. So in this case, we would reverse the market probably. So we're basically dealing here with a failed auction, as I've told you before. So after some time of price spending in this area, I would look for volume that is distributed by the time. I'm just going to plot it right here. And maybe right now you can't really see a lot of volume going on right here. But I am a swing trader, so this would be probably totally fine for me. Also considering macroeconomics and stuff. I would short the market here on the volume spike or some sort of rejection confirmation, and then place my take profits somewhere at these lows or maybe at the end of a value area low. And I'm mostly a reversal trader. I'm not really a continuation or breakout trader, so I only showed you this example, but you can put this into practice in whatever way you like it. Another strategy is a 15-minute breakout strategy, but I think this is meant for like futures or stocks. It's not really meant for Bitcoin, but you could try. And this was basically a short video on volume profile that I wanted to show you how to use it and stuff like this. Hopefully you are able to get some concrete information in this video. I know I am doing the videos like not really in the right YouTuber way. I don't really like organize the parts of videos, but I'm trying my best, as this is something that I would like to continue on doing, just for the sake of like doing something, okay? But this will be it for this video. I hope you learned something new, and I hope this will be like in help in your trading strategy. And I will see you in the next video.